All right, well, that's some opinion. Let's get one more. And this is Mark Matthews, who's now with us in the program of Bank Julius Baer and Company. Mark, good morning. Great to have you with us on the program. Happy New Year. I think I'm speaking to you for the first time in the new one. So great to see you. Just a quick, so FII selling has continued here in India. And FII weighting, as far as Indian stocks are concerned, is now the lowest in at least 10 years, if not more, Mark. And this is a big underweight because India's weight in the MSCI Asia ex-Japan index is just shy of 20%, about 19.8% or so. So there's a few percentage points underweight that FIIs are running here. What's your sense, Mark? Will that reverse anytime soon, or this is going to be a tough one?
My sense is that it depends on two things, the dollar and the S&P 500. The dollar, as you know, is extremely strong. I struggle to see it going much higher because it's as overvalued as it's ever been based on fair value estimates, basically economic estimates. And then with the S&P, the big question is, do we get a little correction, say 5 to 10%, or could we get a bear market? A little correction is fine for a country like India. It might result in net inflows as people look for alternative investments. But if there's a full-on bear market in the United States, in other words, 20% decline or more, then all bets are off everywhere in risk assets, and that would include India. And I think we're in a very tricky situation now because there are actually some reasons why we could expect a sizable correction in the S&P 500 this year.
Oh, that's pretty interesting, Mark. Hi, good morning and Happy New Year to you.
Thank you.
Why is it that you're expecting finally a correction to show up on Wall Street? I mean, the data is still very strong. Corporate sort of performances have been pretty good, at least up until the last earnings season.
Yes. Well, I suppose that in a way, that's one of the weaknesses of the market is that the consensus does look for 13% earnings growth this year. So we really have to beat 13% to make it look good. That's a high number. And even assuming 13% earnings growth, the PE of the S&P is on 22 times this year's earnings. So that's not particularly crazy expensive, but it is on the rich side. And then you have on top of that the investor optimism, which according to the conference board is at pretty much an all-time high. It's 53% of Americans, as of the last reading, expect the S&P to be higher 12 months later. I think only once before in the history of that series, which goes back to the 1980s, did you have in excess of half of the people surveyed expecting the market to be up the following year. Then we come to all of the foibles that will no doubt be present with the incoming Trump administration. A lot of their policies could be inflationary. And then I think the icing on the cake is the Federal Reserve. We do not think they will cut rates another 2 times this year. At best, we get one more cut, but even that, we sort of 50-50. They don't need to cut rates, especially in an environment where you could be looking at increase of inflation due to policies from the incoming administration.
Okay, all right. Hi, Mark. Good morning. Good to see you in. Nigel on this side. Well, Mark, you're sounding a little bit cautious this morning on global equities itself. The other big data point that we'll be waiting forward to is to see what U.S. President Trump does. And there's a lot of uncertainty on that front. It could be inflationary in nature as well with regard to the action that people are talking about. What's your view? Will he walk the talk? And also, where does India fit in the scheme of things? Because one view is that he'll be a little bit more, lenient or a little bit more friendly towards India. Your take.
My sense is he likes India. I think he likes Indian people. Indian Americans tend to be Republicans, so that's helpful. And with his policies, it's really difficult to know. Number one, he can change his mind very quickly. So he can say one thing and then just the next day do something totally different. But he has advisors, I would say, who do understand global economics and the inflationary nature of a lot of what he wants to do, like the incoming Treasury Secretary Scott Bessent, like the chairman of the Doge, Elon Musk. And so I'm sure those kind of people would be counseling him against some of the really big inflationary things, first and foremost the tariffs. But I think he genuinely does believe in tariffs himself, and he does want to have more manufacturing in the United States. And I have to admit that he has a point that in any economy, not everybody can be working in the service sector. You have to have jobs for people in manufacturing. So we'll wait and see. I mean, the market did breathe a sigh of relief 2 days ago when the Washington Post published an article quoting informed sources that the tariffs would only be on strategically important sectors, and it listed a bunch of them, and they weren't, they were quite, how should I say, specific sectors, that not very big sectors. So I hope that's the case, but we really don't know. We'll have to wait and see.
All right, Mark, we'll leave it there. Thank you very much for joining us, and good speaking with you, as always, here on CNBC-TV18.